Okay, I'm just going to go back to our credit card discussion with Sanjeev Mogde, EVP and Head of Credit Card Payments with Axis Bank. Sanjeev, thank you for joining us.
Thank you.
First, what's been the mood this year in the transactions, what you've seen in and around festival season? Because the credit card business of plastic money is the clear indicator of which way the demand has been.
Yeah. See, unlike most of the other segments where the mood is fairly somber, in plastic world, whether I'm talking credit or debit, the spends have actually seen fairly robust growth. And when I'm talking about robust, I'm really saying on cards, credit cards, we're talking about growth upwards of 28-30%. On debit cards, I'm talking about growth rate upwards of 20. Now, in any context, these are fairly robust numbers. And this trend has continued right through the year. During festive, because spend data still has to come out. The data will come out end of October. But as of now, we are looking at fairly healthy growths. Now, this I'm talking about industry. When I'm talking about Axis, I'm really talking a significant premium to this on both credit and debit.
No, but has there been significant, what has been, so let me rephrase it this way. One, what you've shared with us is a growth.
Yeah.
Now, India is an underpenetrated economy, financial transaction, credit card penetration will increase. So the top line is that 15, 20, 25, 30% growth, I think, is here to stay. But if you have to compare the transactions this Diwali versus last Diwali, I'm asking you a difficult one because I'm sure the data has not been compiled yet. Yeah. But if you have to go by what you've got from your teams and what your understanding is, what has happened to purchasing this Diwali?
That's what I'm saying. See, you can analyze it whichever way. So we've analyzed data by total spend to total spend. Last year to this year, I'm talking about growth for us. I'm really talking about 35-40% plus growth.
Okay.
Spend growth, I'm talking
Diwali
about.
spend growth. Festival demand growth
October
for
to
you
October, festive to festive. We compare both because every year the Diwali and Dussehra period can be different.
Yeah, of course.
Right. So last year Diwali was, if I remember right, November 7th, for example. So we are really comparing two things, October to October, and then we are comparing festive to festive. Festive is really the first day of Navratra onwards.
Okay. So the festive demand, I want to flash this comment. According to
continues to be robust.
Continues to be robust, and there is a 30+% uptick in your credit card transactions.
Yeah, ours might be slightly higher, but at the industry level, I'm fairly confident it's going to be 30% plus on credit card.
Okay.
Debit card would be more like my sense, around a 20-25%.
Okay.
Now, all of us are also moving to these UPI and mobile payments. Yeah. What kind of growth are you seeing here, and how much of a disruption do you think this will be to the traditional system? And also, if you could break it down, you were talking with us just a short while ago. Yeah. For the bank in specific, how does it work, these UPI payments?
See, the way to look at UPI is these growth rates we haven't seen. Okay, when we talk UPI, when I'm talking about plastic world being fairly healthy at 25, 30, 35, in UPI you're really talking about 100% plus growth rates. Now, obviously, we have to understand this was a product launched in 16. So in that sense, it's not like it's been a long history of 20 years, etc., that growth rates get moderated. So this is fairly initial stage of UPI, and the growth rates have been very, very high. The other way to look at it is what is actually catching on over the last 1 year is people first took to UPI to create a handle. And then they started off really paying each other, which is I make a peer-to-peer payment to somebody. It could also be one of the players giving a cashback to the customer. All of these were really peer-to-peer transactions. Last year onwards, over the last 15 to 18 months, I would say, frankly, we've seen a significant growth in what we call peer-to-merchant payments. So I or some customer uses it to make a payment on Flipkart, payment on Amazon, etc. However, this is still largely in the e-commerce world. So it still has to take off really in the physical world. Today, I would not really compare UPI to a plastic as two things playing against each other. Frankly, all of these mechanisms go towards digitizing the whole payment ecosystem in the country. A particular customer may choose to use a plastic. Another customer may choose to use UPI. The same customer may choose plastic at some time and UPI at some other point of time. It could be his habit, it could be a promo which is running on it, it could just be a matter of choice. It is very difficult to pinpoint what the driver for that would be, but the fact that it is customer's choice. So you offer it to the customer and leave it to him or her. But this payment ecosystem is actually rapidly changing now with plastic world continuing its robust growth, which I was talking about, and UPI coming in and taking off at a pace that we've really not seen ever.
Okay. Talk to us about, the various revenue streams that you're looking at right now, the size of the opportunity. I mean, if we're seeing this kind of growth in a down period, what really is the upside potential you're looking at in a market that's driven by consumption?
Okay, so two things. One is, at all points of time, credit card, I'll talk about credit card right now. Credit card business comes with the fact that it is completely unsecured.
Sure.
So you have to keep in mind, you have to respect the business for the fact that it comes with completely unsecured risk. A customer can choose to not pay and he can tell you in the face he'll not pay and you can't really do too much about it. So you have to respect the fact, therefore, that you have to be very careful when you're talking about growth rates. it is sometimes easy to get swayed away by these growth rates, by the high revenue streams, and this is a good profit-making business for sure. To get swayed away, you have to respect the business at all points of time in terms of the fact that it is completely unsecured.
So is there
At
an
its core.
ideal average transaction that you kind of look at size-wise?
There is no ideal. So currently, I think the credit card average transaction is roughly around 2,800 to 3,000. But there is no ideal size that we look at, because really a utility payment is always going to be, let's say, 500 rupees. Five-star hotel bill is largely going to be 10,000. So it's a mix of all of that. So there is no ideal that we look at. But in terms of business, the drivers are the fact that, one, the Indian market is still underpenetrated. When you're talking about 50 million, it's a country of 130 crore. That makes it 1,300 million, right? And this 50 million cards are actually, given my sense, is more like a 3.8 to 4 crore customers. Some people have a couple of cards, etc. So it's still very underpenetrated. But keep in mind, India is a complex country in terms of geography, in terms of credit data availability, etc. So it's not easy to necessarily underwrite everybody.
In the cashback schemes, and trust me, as consumers, when we look at these cashback schemes which are offered by credit cards, who takes the haircut? Because one simple golden rule of financial world is that there are no free lunches. There will be no free lunches in this also. So when I do a credit card transaction and I get 10% cashback, which comes back, who takes the haircut? The manufacturer, the retailer, or the credit card company?
It is normally between the manufacturer, let's say, and the bank. And that's a bank, because largely credit cards are run by banks. So it's between these two institutions. And it's a long-term strategic tie-up that you have. So, for example, we want to incentivize our customers to buy an LG fridge, Panasonic TV, so on and so forth, etc. And Sony TV, for example. So we have tie-ups with all of them. And these cashbacks and these offers of EMI and all of that come in partnership between the entities involved in the transaction. The way to look at these cashbacks is the fact that it is like a marketing promotion for your business. Again, as I keep saying, somebody may choose to advertise, somebody may choose to put up hoardings, somebody may choose to incentivize the customer directly. Now, these are ways that you incentivize a customer to actually choose your card during a period. Festive period, obviously, by any sense, is the largest spend period in India. The period which really starts from first day of Navratra onwards. And it goes on right now, it will go on almost till the year end. Obviously, there will be some amount of slump as Diwali period ends, which is today, tomorrow. And then onwards, again, December, it will pick up. But these are investments that we make to essentially keep the customer with us and keep the customer enticed with the fact that the card that he carries with us, Axis, is actually a pretty powerful card.
I want to go back to that first point once again. I don't want to get this one wrong. It's very important for us to get the right messaging out. If I would have asked you on 1st of September, Sanjeev, what do you think of the festival season demand? Because there is a slowdown, and let's accept it, India is slowing down. So you must have made a view, you must have made some other assumptions. Now, after bulk of the festival season is behind us, if I revisit that conversation, which is that what your assumptions were in the month of September, and where do you think you stand, given that the festival season demand, bulk of the festival season demand is behind us? Are the numbers and sales as per your September projections, expectations, or they higher or lower?
They are in line pretty much. And I'm talking about pretty high numbers. I'm talking about 40s, 50s. Is what we had budgeted for ourselves, and we are in line with that.
So, kahe ka slowdown?
We were also aspiring for the last, sorry?
Kahe ka slowdown, if I may use the Hindi word.
Yeah, so it is difficult to say. Okay, for sure, when we again break up the spends, we break it up into discretionary, non-discretionary. Non-discretionary is not going to slow down because it's your utility bill you're paying. Discretionary is where you're buying an apparel, you're buying a mobile, you're maybe spending on holiday, etc. We've looked at all of those trends. As of now, just basis credit card spends and debit card spends, it's difficult to say that there is a slowdown, to be frank. But there are various ways to peel an onion. The way we are peeling it, it looks pretty fine.
So you've painted a fairly optimistic picture now. Break it down for us in terms of numbers. What percentage A does this credit card business, etc., contribute to the overall revenues, and what kind of earnings, or top line growth are you seeing?
See, credit card is a pretty profitable business overall because it is unsecured. But keep in mind, because of the fact that it is unsecured, it is supposed to make good amount of money. You cannot compare it to a mortgage. Mortgage is a large balance sheet, low risk business, and therefore you do make money, but you don't make a lot of money when you're talking about ROEs, etc. Credit card will normally be a very high ROE business. Keep in mind, if you have a downturn and the risk goes down, this can actually turn completely topsy-turvy. So mortgage will still chug along at reasonable at fairly good rates of return. Credit card could go through a slump where it could make significantly lesser money or actually lose money. Given that fact, obviously it continues to be an important part of a bank's, not so much balance sheet because it's a small balance sheet business, but in terms of returns, both on fees and on overall profits.
Talk to us
I'll
about
not talk percentages right now.
the kind of new additions you're seeing as well. That would be an interesting number to know. Any NPAs, and again, on the NPAs, are they at the higher end of the band or the lower end? Because you're looking at further penetration, but is there more risk there?
So you can look at Indian, and this is data which is available with Bureau, etc. What are the loss rates or the write-off rates for credit cards? It's actually fairly narrow and fairly predictable band for the last 3 to 4 years.
Okay.
Is something changing right now over the last, let's say, a year period or 6 months period, etc.? No. Are we seeing slightly higher risk in some of the segments of the last 2-3 months? Yes, but that we had seen a couple of years back also. So it keeps happening up and down.
Job losses is not having impact on retail.
So right now, sorry?
Job losses, what headlines?
As of now, no. If you were to look at credit cards or you were to even, I would say for a business I don't manage but I know, which is personal loans, this news about job losses, etc. is not impacting the loss rates. Let me be absolutely clear right now. Okay, whether you take about overall discussion or you talk about episodically companies that have gone through the threat of job loss, etc., these are not impacted. We have looked at the portfolio again, as I said, in a lot of detail, and risk seems to be holding. At any point of time, of course, risk is holding does not mean that risk will hold. So you need to manage it pretty closely. But as of now, continues to be fine.
Is there any kind of credit rating system, that perhaps regulators are or banks like yourself are working towards?
See, for customers, we already have, right? What we call as bureaus, whether you call it CIBIL bureau, whether you call it Experian and so on and so forth, etc. There is already a credit rating for every single individual on it. What will happen, of course, is if I source a particular application and I check it with bureau, there may be a record for him or her, or there may not be a record. Then it's a call that you have to take. As to what do you do with a person who does not have a record with bureau.
Just one more last.
Once you have a record on bureau, it will tell you whether it's good or bad. And of course, everybody's definition of good or bad may differ.
Sanjeev, a closing question from my side, which is that interest rates have come down. Now, all of us at some point in time have missed our credit card cycles, and then what comes back is a very high penalty, including interest rates. The interest rates which credit card companies charge, which is the penalty interest rate, is very high. That's largely because you're giving me an unsecured loan. If I don't pay up, you'll have to charge your fee or you have to charge that interest rate spread. Will that come down?
I don't anticipate it coming down because, see, frankly...
Even if repo rates are down, that will not come down?
It will not come down because this is really marginal, the impact on repo rates, etc., really on your credit card business. Credit card business, keep in mind, is a very small balance sheet business. Even in today's, whether I'm talking about Axis or even the largest of businesses in the largest of banks, these are small balance sheet businesses, one. Second is, while we charge this interest rate, less than 40% of the amount outstanding actually pays up for it, or less than 40% to 50% of the customers actually end up paying for it. In fact, less than the number of customers who will end up paying interest is less than 30%. The amount is going to be higher because people who don't pay have a higher outstanding. Therefore, for the rest of the people, actually the interest rate doesn't matter because they are paying back cycle to cycle, as you say.
No, I understand, but I'm just saying that if I look at the interest rates in the system versus what the credit card companies charged us, there used to be a large spread. And I understand inflation was why interest rates are going high. You'll charge me a certain penalty rate or interest rate. Interest rates have come down, but the credit card companies have not brought the penalty rates down.
See, look at it this way, just for a minute. On a personal loan business, let's say you run a personal loan business at 15%. Everybody pays 15%. Right. And your cost of fund is whatever, 6, 7, 8, etc. It's coming down marginally, but it continues to be at that rate. The way people normally talk about credit card being a 35-40% interest rate. Keep in mind, less than 1/3 of the people are paying it. So if you actually multiply 1/3 with even for a minute 40, it virtually comes down to 15% only. So frankly, it's a very similar business. Some people, in a certain business, everybody pays. In a certain business, people who pay on time don't pay. People who don't pay on time pay. But interest rates are not very different if you look at it from how it looks on the balance sheet rather than how it looks on...
But those who pay, it hurts them. So always pay credit card bills on time.
So I would always advise anybody I meet, whether...
friends or family.
Please, friends, family, anybody I can meet, please do pay on time. We are okay with that.
Even though he'll make more money, he's saying please pay our bills.
Yeah, exactly. So you're okay with that. Thank you. We would have loved to stretch this conversation further. It's been a very interesting one, but we're completely out on time there.